This week on Moving Markets, corporate Malaysia delivered strong earnings in the fourth quarter of 2020. So is recovery full steam ahead? Ambank agrees to a multi-billion ringgit settlement over its ties to the 1MDB scandal. And which stocks stand to gain and lose from a major overhaul to the Seng Index? The latest earnings season in corporate Malaysia shows signs that recovery is on track. The fourth quarter of 2020 was the second consecutive quarter of earnings growth. Overall, there were more positive surprises than disappointments compared to street expectations, which is notable since fourth quarter GDP contracted by 3.4%. But let's take a closer look. First, consumer and healthcare sectors saw more resilience than expected throughout the movement control order. The consumer stocks like Nestle, QL Resources, and Leonghap International got a lift from the year-end festive season. And defensive healthcare stocks were also able to withstand the ups and downs of the business cycle. Another sector that outperformed expectations was media, in tandem with the improving advertising expenditure environment. Notably, Media Prima, the country's largest media group, delivered the second profitable quarter in a row, owing to its ongoing turnaround efforts. Meanwhile, plantation stocks like Sime Darby Plantation, IGN Plantations, KL Kapong, and TSH Resources also posted better than expected earnings due to strong crude palm oil prices, which were about 20% higher on a quarterly basis. And this time around, there were not many disappointments, as analysts have cut their earnings expectations to account for the negative impact of COVID-19. However, risks remain as MCO 2.0 may impact earnings negatively. But recovery is largely expected to continue, especially with the vaccination rollout in the country. Still, other risks to look out for include the potential low take-up rate for the vaccine, as well as lingering political uncertainties. Ambank has agreed to a 2.8 billion ringgit settlement to the Malaysian government over its involvement in the 1MDB corruption scandal. The sum is nearly 30% of the bank's current market capitalization and will impact its earnings, while its price-to-book ratio has declined to 0.44. Ambank has said it has sufficient buffers to absorb the loss. Still, the settlement is expected to slash 15% off of shareholders' equity. And on the back of this news, Australia and New Zealand banking group ANZ, which has a 24% stake in AMMB, has said it will write down the value of its investment by 212 million Australian dollars, reflecting the erosion in the company's value. Ambank was suspended from trading for 2 days following the news and gapped down by 16% when it resumed trading on Wednesday morning. Hong Kong's Seng Index is about to see a major overhaul. In one of the largest shakeups in over 50 years, the index will be expanded to include 80 constituents, up from the existing 52. Each stock on the index will also be limited to an 8% weighting, as opposed to 10% currently. The Seng Index is presently dominated by financial companies, which make up over 40% of its weighting. So the rationale behind the change is for the index to better reflect the range of publicly listed companies in Hong Kong. The overhaul is significant because the Seng Index is tracked by tens of billions of dollars in pension fund assets and exchange-traded funds. Plus, it is, of course, the second largest market in Asia. Although changes will only start to take effect in May, shares of index heavyweights like Tencent, AIA, and HSBC may face selling pressure when the changes are implemented. On the other hand, Xiaomi and Meituan, with weightings capped at 5%, have now started to see some inflows. And that's what's been moving markets.